Well, g'day there everybody. I hope you are doing well no matter where you are located around the world. It has been another interesting session which has just taken place. Yesterday we made note that the S&P 500 and the Nasdaq had closed the open window, taking us all the way back to the 30th of October. The final market of our three, which hadn't actually closed that window, was the Dow Jones Industrial Average. We got very close during yesterday's session, and we were expecting the Dow Jones to push on down and to ultimately close this window over the coming days. We'll fast forward to today, and you can see the difference in these lower wicks. Here is yesterday's candle. This is obviously today's candle. And what we have done is close the window. We overshot it ever so slightly, and you can see more or less as soon as we did this, we started to see a rally off from the lows. And the candlestick, the body of it, closed as a real white day body. We closed up 208 points. And what this becomes now is the first reversal signal, right? A reversal signal to the upside, a bullish candlestick right off from a very important area that we've already deemed to be so on the technical chart. So really what this is setting up as at the moment is that one, we've been expecting these windows to close. They have closed now, all three, and we've just printed our first reversal candlestick to the upside, which is very favorable. We've been waiting for this for quite some time. There could be, of course, a little bit of continued volatility, all right, around these current areas, above 25,000 on the Dow Jones Industrial Average. On the S&P 500, it's coming in about 2,700. That looks to be the true pivot that we need to pay attention to. And on the Nasdaq, you can see just here, 7,100 is where these lows are really starting to shape up very, very nicely. In the past, we've spoken about, well, when we see this pullback, are we going to hold at the window, and is this going to be that next consecutive higher low? And as at the current juncture, as at the recording on Thursday, that appears to be the case. We've almost got a tweezer bottom setup on the Nasdaq as at the print today, which is a very bullish signal. At the same time though, what I am a little bit observant of is the simple fact that we are technically getting a couple of sell signals on the Stokes and to a lesser extent on the MACD, which is why I am expecting a little bit of market volatility to persist, i.e. we may not see a very aggressive move off from the lows immediately, but what should happen is that over time, and if we more or less move sideways, and if we continue to move sideways, this Stokes is going to come back more so into the 50 point, but then you're going to watch for it to turn up. So I've had a lot of emails over the past number of weeks. Most recently, however, over the past 1 to 2 days, I have received a ton of emails asking, well, what do I do at this open window? I mean, what am I meant to do at this open window? And obviously, trading is very autonomous, right? You need to obviously and ultimately make decisions for yourself. And it really comes down to, right, do you want to just place market orders off from the gap? And again, today's session would have been a great time to do that if you were watching the market actively. But what we do, right, or what I do as a technical trader is that I use contingency orders which are triggered on price. So really what we wait for is the structure of the market to develop. You get the swing highs and the swing lows, which ultimately become the perimeters of support and resistance, which set the brackets of the trade moving forward. Once we see the candlestick set up, once we understand what we're looking for, and then it begins to eventually show, that is when we can very easily bring down conditional entries to go long a market if we deem it to be a bullish setup, which is exactly what we're talking about at the moment. So if you wanted to trade the diamonds, this is the chart of the Dow Jones Industrial Average. Again, this is what I will personally be doing. You have to make your own decisions in the world of technical charting and trading the financial markets. But what my contingency order will become, it will be when or if the DJIA moves above 25,567, then I will buy X amount of calls on the diamonds, ticker symbol DIA. Now, you can use this format for anything. I mean, if you really wanted to, if you're looking at the charts and your analysis was telling you that, look, the markets are bearish, well, then you could simply put in a bearish trigger to say, look, if the DJIA moves below 24689.09, then buy X amount of calls on the DIAs, the diamonds. It's really as simple as that. Now, you know, in the purpose of not confusing people, I'm going to delete that bearish trigger because ultimately we're not looking to trade bearish, are we? We may see a little bit of continued weakness around this pivot, but these candlesticks here are suggesting reversals to the upside. I've given you what my SPY trigger is going to be now that I've seen that first reversal. And I just wanted to point out, by the way, that these trade setups, I mean, just say, for instance, on the SPYs, okay, 2749, well, that's going to be the trigger on the SPX. But these are going to be trades that we're most likely going to hold for a number of months. That's more or less where we're positioned at the moment. We've gone through what appears to be that intermediate correction. It's more or less run its course by the looks of it now. So you need to move into the mindset, okay, as a swing trader, that any market positions that you are basing yourself into or looking to enter into, they're not trades that you're going to want to liquidate, say at 2875. They're not going to be trades that you'll be looking to liquidate at 29 or even potentially 3000. This is a trade that you're going to want to hold on to for a number of months into 2019, considering, all right, if we hold this support area over here. The same is true, for instance, again, on the Dow Jones Industrial Average and also the NASDAQ. The NASDAQ, as I've already said, looks to be setting up that of a tweezer bottom. It's up to you where you would like to place your entry. Again, you could just say when the compact moves above or the NASDAQ moves above X will then trigger me into, right, X amount of calls of the Qs, QQQ. Just a very simple trading technique, conditional entry based on price, where you don't actually have to watch the market intraday. You can do the analysis and then set the structures of the trade up, the criteria of the trade up, which takes all of the market noise, all right, which is really just operating around you out of the picture, all right? It's the best way, in my opinion, to trade the markets. You're not distracted whatsoever. You let, you perform your analysis when the market's closed, and then you just trade your plan. It's very important to do so. So I just wanted to say that this is going to be the final sort of afternoon market update that I will do this weekend. The next time you will find me will be in that pro analysis class, all right? And that's where we're going to go through our top 12 individual trade list. I think you get the idea when it comes to the trades over Monday week, which is going to be very exciting for us. But if you want to find a more detailed analysis as to what is exactly going on around these areas, have a look, subscribe, go into it, because it's about 90 minutes of a full-on, intensive, technical approach to the markets. And we really drill on into the technicals, which are going to make, or at least help you understand just what is going on beneath the surface of this market. So having said that, everyone, the markets themselves as of Thursday are starting to price in the reversal. This is good news. It's following along with our outlook, our forecast, whatever you want to call it. And if you haven't already acted on the market, now is the time to be thinking about, well, where am I going to place my contingency entries? Where am I going to place my entries to get into the market? A lot of trade opportunities forming, which is fantastic. And I think next week we're going to have an absolute smorgasbord when it comes to definitive trade setups, which is great. And this may be, again, just to repeat myself, this may be the beginning of the continuation of the intermediate trend in the direction of the primary trend. So you get these correctional moves back into not necessarily always the macro primary trend. We haven't corrected into the macro primary trend. If I show you where that primary macro trend is, it's all the way down here on the Dow Jones Industrial Average. It's the purple line on my screen. On the S&P 500, it's this purple line all the way down here. But it appears as though, and again, just to show you this on the NASDAQ, this is what's going to differentiate that of a bull market and a bear market. But if this is going to be the base, and there's a lot of technical sense as to why this is going to be that next basing level, well, then what you can expect is this market more or less to just move on up higher off from these rough levels at the moment, which is exciting because this is exactly where you want to position yourself for the continuation of that big macro bullish uptrend. All right, so a lot to speak about over the weekend. I look forward to going through that with everyone on Saturday. Until then, everyone, enjoy your Thursday evening. And if you're not in pro, I'll see you next week at some point. All the best, everyone. Farewell.